Good morning to you in the States and good afternoon to you in Europe. We are live today for the US Open. Welcome to we were hoping for a quiet start to the week, and that's not what we've got. Shane, how do you see this? I mean, let's deal with the elephant in the room first of all. The Great British Pound has been absolutely trashed over the last couple of days. I mean, when you wake up to see something like that, a move, an 8% move over the last few days, what are you thinking?
Well, I mean, it's just been a robust volatility. There's no two ways about it. And supposedly the primary market driver here is tax cuts. And Nick, we were talking about what a tax cut is. A tax cut actually helps businesses' bottom line. And all this is just it's not an institution of a planned tax hike. So when we step back and take a look at the fundamentals and what's driving the pound, I completely agree that this is a tremendous overreaction to the bearish side. I mean, way too fast. I mean, 8% in 2 sessions. We had a nice pullback to 38% last night. There was a pretty good scalping area. But boy, I can't remember a week where we've had this much action this early on.
It's very strange. I mean, we were hoping for a quiet start, but it hasn't been. The market has clearly interpreted tax cuts, a 45 billion pound tax cut package, as being ultra dovish. They're looking, I suppose, in some ways, they're sort of feeling like the Bank of England is lagging behind everybody else now. There's really only two left. The Bank of Japan. I mean, no one's expecting the Bank of Japan to do anything anytime soon, and the Bank of England is now just. I suspect it's possible because they didn't hike 75 basis points, but it feels like the market is in somewhere then taking its fury out on sterling. But that kind of a move, it's not something that you see very often in markets. I mean, the levels that we've got now, that's the lowest level now in sterling from since 1985. So where could you go? If you're looking to how to like get involved in this kind of a market, how can you look at two daily candles like that, and then actually sort of get involved? Would you like just look at this from just a scalping point of view, or would you completely stay out of the market?
As far as a position goes, taking any sort of position in an environment this volatile and this active is problematic at best.
Mm.
And you're going to find yourself trying to play reversals, picking bottoms. I'm trying to pick intermediate term tops on a pullback. For me, it would just be scalping. And it's fantastic scalping because you have such incredible price action and participation. So for me, my eyes kind of light up when we see these kinds of daily ranges and things. But as far as taking a position in this market, like you said, I mean, we're trading levels not seen since what 1985, beneath
Yeah,
1985 lows. I
yeah,
mean, that is an absolute shift almost back to the dark ages of currency
yeah,
trading.
yeah.
To try to bring anything of value from a historical standpoint right now, very difficult. So I would be hard pressed to step up and try to pick a bottom or an intermediate term top here. I think we have to let the waters clear a little bit. I'm always firmly risk off on a Monday. Today, even more so.
Yeah.
So I would really be watching my risk if I was trading this pound.
I mean, the only thing I can see at the moment, the bulls are just now. I mean, we opened Globex last night at around about the 108.50 area, before then dropping all the way down as low as 103.56
Yeah.
on the spot rate. But with the bulls are now just holding over that Globex open. But usually in a situation like this, when America then comes online, their interpretation can be completely different. So we could rally from here, or we could just then retrace back lower, back down to the 105, something like that. Where potential long opportunities might be snaffled up. But it's going to be interesting to see how it gets played out. There's been talk of a potential emergency Bank of England statement later on. I've not seen any details on that as yet. But if that's something like that does actually occur, then it's to me, if the Bank of England then come out and actually say something about this situation, it comes across as like, are they panicking just because
Yeah.
we've had volatility? Because not between Thursday and now, in terms of like the path route of the Bank of England has not actually changed that much at all.
Yeah, absolutely right. And you make a great point there. A lot of times from these central bankers, less is more.
Yeah,
And if we see an emergency statement, or maybe we're having a presser later today out of the blue, I think it sends completely the wrong message.
yeah.
If I was the BOE, I would probably just I would rein it back a little bit and just see how these markets play out. Got a key level right here. We're back above 108. So the damage, I mean, while it is bad, you still have a pretty nice recovery off of intraday lows. So
Yeah.
perhaps we've seen the worst of it.
I mean, it's going to be interesting to see how this situation develops. I am, one of the things I thought this morning during the session is there's so much focus on the pound at the moment, but what that quite often means from the skeptical trader in me says, okay, well, if everybody's looking over here, what else is going on somewhere else? So there's various different markets that we can go through, and obviously we're not far off now. The U.S. equity open in the next 5 minutes, but I mean, the gold is been relatively stable today, or just the bids have been pushed down a little bit all day, all morning on gold. But one that I've got my eye on as well is crude oil. Crude oil has been bearish the last couple of weeks. That has played out quite nicely. But now just looking at that on a 1 hour chart, you can see, if I just take it back to the daily, you can see that we have sort of there's some very key support areas coming in for crude oil at the moment. We've got we've just tagged 77.26 this morning, which is a potential support back from January last year, and then we've also got a July 2021 support high coming in at around about 76 to 75. So we are within the area now for a potential bottom in gold. What do you sorry, in crude oil? What do you make of the crude oil market at the moment, Shane?
Well, I mean, we're clearly bearish. We're clearly bearish. We've shifted gears into that fall seasonality, that winter seasonality. But what we do see is really beginning with that long-term uptrend on the U.S. oil CFD specifically. You had that long-term uptrend that's really started in December of last year, and you had a nice, robust run-up. Really, you got that massive spike back in March with the Russia invasion of the Ukraine, and since then we just sort of traded sideways, and now we're coming off. And when I look at that range, just a basic spike to spike range, December's low, December of 2021's low to that invasion high up around 129.47. That 78% retracement is right at 76.82. So
Yeah.
I completely agree with what you're saying about that support zone. I think that's a big time level. I'm still sort of holding out that we are going to put in a hard test to 75 just
Yeah.
because it is a big round number. And
Yeah.
I'm a firm believer in those.
Yeah.
So, I mean, for me, definitely got a bearish bias towards this market right now. Watching 78%, that's 76.82 area, 77, very closely, very closely.
Yeah, it's going to be a very fascinating one to watch. And of course, like the economic calendar as we go forward this week, we last week, if you are new to trading, last week was pretty much an exception to the rule. It isn't like that every single week, and we are definitely a little bit more sparse on the economic calendar for this week.
Yeah, I mean, this is what I would call more of a normal type of a week. Maybe we'll see some true price action. Now, it certainly hasn't started that way, Nick. I mean, we come in, we've got Maloney in Italy, we've got Lagarde coming out talking about government subsidies in the
Yeah.
EU to help struggling families, and things need to be targeted and limited and temporary because of the inflation. So, I mean, there is so much news that has broken over the past 18 hours, 12 hours that we really started this week with a bang. We'll see exactly what U.S. equities do on the open here in 3 minutes. Closely watching that VIX, though. So I think that the angst in the market's palpable. Even though I was looking for more of a quieter week, a much quieter week on the economic calendar, I think we're going to get some big price action.
Yeah, I think it's going to be a very interesting one. I mean, obviously, like the theme in Europe as a whole is definitely a driving force in the market. That euro itself, let's just quickly go back to that euro. It has now pushed down into what I would consider my sort of like key monthly support from I think 2001. The bottom end of that coming in at 96.09, but we've skewed through it. So I honestly think there's potential for a little bit further downside. The right at the bottom of the monthly lows, we've got a doji that comes in around about 94.21. The open and close of the doji 94.21 and 93.69. So that is a potential downside target. But by that stage, you're getting quite overextended now, well under parity for the euro.
Absolutely. I mean, the past 4 days, if you just take a look at the daily chart, I mean, the past 4 days have been dramatically bearish. And
Yeah.
and when I'm looking at trading a formation like this on a daily, I'm saying, okay, my short-term trend is definitely bearish. I'm looking to sell pullbacks any chance I get. Today, we may get one. We've got sort of a doji, an early session doji setting up right now, right around that 96.50 area. So
Yeah.
for me, I'm firmly looking at your daily 38% retracement up around 97.50ish, 97.44. I think that could be a key resistance area. But for me, once we broke from parity, Boy, it's really been all over. The bears have controlled the action. So for me, I would definitely have a bearish bias here, looking to get short from a retracement level.
Yeah, yeah,
Absolutely.
yeah. I mean, I think Christian Lagarde has actually just come out and said recently in the last sort of like 20 or 30 minutes to signpost, there are going to be further interest rate hikes along the way. So if you take that into consideration with the trajectory that the euro's been on, it just doesn't look good for any upside at all at the moment.
Sure doesn't. Nope, sure doesn't.
So how are we viewing US equities? Because now the markets have just opened in the US. So if we actually just go and take a quick look at the opening range for the S&P 500, we're currently sitting. We're still not quite tagged the June 17th low of where is it? Let's just bring that in at 36.36. So what are you expecting sort of like today and for the coming week for equities? Are we expecting more risk off, more hawkish tone, do you think?
Boy, I think that we're going to be risk off, really for the foreseeable future. We've seen through the Fed week, through the central banking activities, we have seen a major risk off tone emerge, specifically towards shares. And when I take a peek at the U.S. 500, the S&Ps, I start with the VIX, a
Yeah,
very very important indicator for me. And right now we're printing about 31.72, somewhere
yeah,
around 32, and that is an elevated level. We haven't seen these types of levels really since a bit earlier this year, 3 months ago. Very prevalent during the Russia-Ukraine situation, and for me, it's one of those deals where I don't know that this is just pricing in the stronger dollar. I really don't know
yeah.
that. I think that there's some other issues on the forefront. It may be politics. It may be the election coming up, and really institutional capital is saying, maybe we're going to get into some bonds. Maybe we're going to take a nice risk-free rate right now
Mm.
instead of trying to really parlay their returns into something large by the end of the year. So for me, final trading week of Q3, I think it's going to be fascinating, specifically as we go Wednesday, Thursday. I think we're going to stay risk off, Nick. I really do.
Yeah, I would tend to agree with you. It's just like any rallies for me in any of the equities, they're looking to be sold. There's nothing in the data that I saw the weekend that is really like signposting a bottom in equity markets as a whole. And given the landscape that we're coming off as well, it feels to me now we've got, because particularly with Meloni now being elected the first woman right-wing president, prime minister in Italy over the last 24 hours. All of that is just European uncertainty, and no, there's not an asset class in the world that is going to be enjoying that right now. So we've not only got a hawkish theme in US equities at the moment, but you've also got that sense of a bit of a risk-off tone, and also that's the reason why the dollar has been pumped the way it has. And if we look at the dollar index today, I mean, wow, you wouldn't have sort of like dreamed of this even just a few weeks ago. The dollar index itself, just like last week, we're looking at 109s. We're now printing 113, 113.17 on the Dixie. I mean, could you have seen that a week or so ago, Shane?
No, no, not in a million years. I opened my charts last night and I said 114. We're printing 114 in the DXY. I
Yeah.
couldn't believe what I saw. I mean, we really did not even hesitate at 112, 112.50. I mean, nothing. So
Mm.
when I take a look at the DXY up above 114, 113, coupled with that elevated VIX reading, that tells me there's a lot of angst in the market. And at what point do you think we're looking just at pure capitulation, Nick?
Yeah, yeah, absolutely. Yeah, I mean, it feels like I'm a big George Soros fan, and he's definitely in the camp of looking at reflexivity, feedback loops in markets, and this now is a market that's looking like it's got that quality. It's looking almost parabolic at the moment, and that's going to need to be unraveled at some point. I do know that there is I think it's a G7 or a G20 meeting signposted somewhere in the middle of October, and on the agenda for that is discussion about the dollar, because there's going to come a certain time when a strong dollar is not going to be healthy for the economy anymore.
Oh, absolutely. Absolutely correct. We're really starting to see, a lot of pressure on the real estate. We have some real estate metrics out here in the United States
Yeah.
this week. The markets will be watching those very, very closely, very, very closely. So the path forward is uncertain. I think that would be the word of the day for me, Nick. Uncertainty. We've got geopolitical action in Europe. We've got central bankers. We've got Lagarde speaking. I believe Powell issued something for tomorrow. I believe he's going to be speaking. Don't hold me 100% on that, but things are changing. We're in a state of flux, so it ought to be a lot of fun. Keep an eye on your risk. If you're trading this stuff actively, keep an eye on your risk.
Yeah, absolutely. And as Shane said, like this is the end of Q3, so we're gonna expect volatility as well as huge big institutions and sovereign wealth funds, pension funds, they all start squaring off their positions, and banks tend to have this point of view of working quarter to quarter. So it's a critical time as we get towards the end of the week. We're going to see natural volatility just from that alone, and coupled with everything that's been going on, it potentially could be another a very volatile end to the week this week as well.
Absolutely. Absolutely. Remember, if you're a new trader, it's not just about your economic calendar. You also have to look at the calendar on the wall, understand when we see the end of quarters, when options expiry comes across the board, when some derivatives contracts roll over. All of these things are very, very important to understand, and really have somewhere in your memory banks.
Yeah, very much so. Yeah, so it's going to be interesting to see how how it exactly pans out over the next couple of days. So I think bearish overall for stock markets as we go into into today and tomorrow. Obviously, just to signpost for people that are watching on YouTube, thank you very much for joining us on YouTube. It's good to see you all. We have got a new Academy to Career Funded Trader program here at howtotrade.com, and it's proving very popular, Shane.
Yeah, I mean the Academy to Funded Trader program. It really is unique in several ways. Number one, it's sort of an elongated program. You have the ability to build a solid knowledge base and really come from any walk of life and be a beginner and have an opportunity to build yourself a career and get the equity that you need to actually make a living in the markets.
Yeah.
One of the things that makes it unique is that 180 days to complete. You really have. I mean, we're not going to come in here and really try to BS you. We are looking for talented people. We are looking for talented traders that can adhere to some fairly rigid risk management. You're going to be a money manager in this program. You're not. This isn't something where you just show up and you try to make a few $1,000s and you go about your day. You're looking to be part of a firm and really an asset. Trading every day, trading the firm's capital, and we're excited about it. We've got a few traders that are actually about to be funded, Nick, and I think it's going to be a fascinating. It's going to be a fascinating thing to watch these folks grow into professional traders and really capitalize on the program. So if you haven't checked it out, be sure to come by the trading room. Check out the Academy to Funded Trader program. We have a wealth of information coming online here in the next week or so. As far as our academy is concerned, I think it's a fantastic tool. It's a fantastic way to get in the market and become a professional.
Yeah, absolutely. Yeah, it's proving very, very popular indeed, and it's just part of the program of stuff that we've got going on. There's going to be a lot of interesting things. The new academy, the educational content is all coming out over the next couple of weeks. The first phase of it, anyway, very much focused around strategy. Not just like here is a strategy. Actually understanding what a strategy is, how a trader needs to embrace the various parts of strategy development to actually make a meaningful change in their own trading style and their own trading development. We've also got as well the second part of our guest streamer as well coming up on Friday. One of our seasoned pro members, Mantis, he will be streaming his breakdown of his own personal strategy, the Mantis Claw trading strategy. That's going to be the first one we did last Friday. Very, very popular with everybody in the room, and he's going to be talking about the Mantis Claws trading strategy in great detail this coming Friday. So that is it was very popular last Friday, and that is not something that you are going to want to miss.
Absolutely. I'll be watching intently, Nick. I'll get it on demand. When I wake up in the morning, I'll be all over that. I want to hear more about the Mantis Claw, that's for sure.
It seems to have gone down very well. So yeah, I'm sure everyone's going to be looking forward to that. And then the next week we'll do an AMA where all the members can quiz Mantis and get it and pick his brains for some interesting trading knowledge and trading education. Right. Okay, that is it for now. I hope you enjoyed that. Take your risk very carefully as you navigate your way through the US equities for today, and if you are trading the pound, then just be very, very careful, because at the moment it seems that the Bank of England has yet to speak, but it seems that anything could happen. Thanks for watching. See you soon.